Good morning, viewers, and welcome to another edition of the Market Review, where we bring you developments in the financial and capital market as it relates to the economy. It's a Tuesday, December 8, 2020, and we take a look at developments in the fixed income and bonds market. Today, we're looking at prospects for deepening sustainable financing in Nigeria. Let's take a look at the outline first. So the outline shows that we'll be discussing Proshare Research Review of previous week fixed income and bond market activities. We'll take Afrinvest analysis on fixed income and money markets. We'll look at the December 2020 FGN savings bonds, Fidelity Bank's bond plan, and Treasury Investments sustainable finance outlook for 2021. And we'll look at our topic for today, the prospects for deepening sustainable finance in Nigeria. You agree with me that's a robust presentation or engagement we have today. Let's begin with the Proshare Research review of the previous week fixed income and money market performance. Money market rates for most of the trading session last week were between 0.50% to minus 1.00%, as system liquidity was fairly robust. However, the rates increased at the end of the week. The overnight rates and open buyback rates closed at 4.25% and 3.63% respectively. This was as a result of the FX retail auction, which mopped up some of the system liquidity. Proshare Research expects rates to trend lower in the coming week in the absence of funding obligations and any other liquidity shocks. The Treasury Bills market showed an average benchmark yield remained unchanged at 0.10%. The Treasury Bills market started the week on a quiet note. However, during last week, the Central Bank of Nigeria introduced special bills for excess cash reserve requirements via a circular. The market had a mixed reaction as investors were unsure how to price in the effects of the new instruments. Although the new instruments are tradable between banks, retail, and institutional investors, and this poses a good opportunity for some institutional investors with residual liquidity, as the NTB rates may be elevated. Proshare Research expects participation in the NTB market to remain quiet in the coming week as a result of the depressed and attractive yields. The federal government of Nigeria bond market started last week on a lukewarm note as liquidity at the start of the week weighed on activity. Average benchmark yields rose to 4.20% last week from the 4.06% in the previous week. This was in reaction to the 90-day tenor special bill by the Central Bank of Nigeria, which has no coupon rates and applicable yield at issuance will be determined by the Central Bank of Nigeria. Also, Edo State government is said to sponsor a 25 billion naira issuance bond issuance program by River Jemison SPV Limited. This also is expected to bring on board a new activity. Although the coupon rates and applicable yields haven't been set yet according to the document presented, expectation is that the market will continue to trend in this week. For the federal government of Nigeria Eurobond market, the Eurobond market continued its bearish trend last week, which was supported by positive news about the acceptance and distribution of Pfizer BioNTech COVID-19 vaccines distributed in the UK, and the news of the OPEC and non-OPEC allies agreeing to increase production by 500,000 barrels per day, beginning in January 2021. Proshare Research expects the market participants to continue to react to events around the global oil price and COVID-19 news. For the foreign exchange for most of the week, despite CBN's continuous intervention. However, at the end of the week, the domestic currency appreciated by 421 basis points to close at 475 naira to a dollar. This is following CBN's relaxing restriction on the receipt of international money transfers in dollar, that's diaspora remittances. CBN also devalued the naira at the start of the week by 6 naira. The new rates pegged for the international money transfer option sales of dollars to banks at 388 naira to a dollar, banks to CBN at 389 naira to a dollar, and the CBN to the BDCs at 390 naira to a dollar, and BDCs to the end users at not more than 392 naira to a dollar. Proshare Research expects CBN to continue its FX management strategy in supporting the naira at the parallel and the investors and exporters window. On to Afrinvest in terms of its review on the fixed income and money markets. The Treasury Bills for markets sustained its bearish run according to Afrinvest, with yields marginally expanding by 3 basis points week on week to 0.1% as investors continue to grow weary of the low-yield environment despite improved system liquidity of 638.2 billion naira as at last week Friday. Average yields on the short and medium-dated maturities remain unchanged, while sell-offs on the 14th of October 2020 led to a 44 basis point increase week on week. This week, the Apex Bank is scheduled to roll over maturing bills worth 50.9 billion naira at the primary market auction across the 91 4.4 billion naira, 182 7.8 billion naira, and 364 38.7 billion naira tenors. This week, Afrinvest expects OMO and NT bills maturities worth 50.9 billion naira and 294.1 billion naira respectively to bolster system liquidity. Hence, expect the CBN to intervene by mopping up excess liquidity via the primary market auction. Afrinvest also anticipates the sustenance of bearish sentiment in the secondary market as investors wait on the sidelines ahead of the primary market auction, while also seeking alternative investments given the low yield environment. Weak to 4.1%. The FGN bonds primary market auction holds tomorrow. The FGN bonds secondary market reversed its bullish run last week, following sell-offs as investors reacted to the news of issuance of CBN special bills. Consequently, average yields across the curve expanded by 19 basis points week on week to settle at 4.1% from 3.9% the previous week. Across tenors, yields on the medium and long-term instrument of March 2025 had minus 44 basis points, the 27th of January 2022 minus 23 basis points, and the 14th of March 2024 minus 17 basis points instruments recorded buying interest. Afrinvest expects investors to continue to wait on the sidelines ahead of the Central Bank of Nigeria's special bill issuance. However, Afrinvest does not rule out the possibility of bargain hunting on instruments that advanced in yields last week. Those active investors advised to trade along short-term bonds that had more sell-offs last week, while looking out for investment-grade corporate bonds with relatively more attractive return. From the Debt Management Office, the Federal Government of Nigeria, pursuant to the Debt Management Office Establishment Act 2003 and Local Loans Register Stocks and Securities Act 1117 LFN 2004 Debt Management Office, on behalf of the Federal Government of Nigeria, is offering for subscription and is authorized to receive applications for the Federal Government of Nigeria savings bonds at the following interest rates. 2-year FGN savings bonds due December 16, 2022, 1.32% per annum. 3-year FGN savings bonds due December 16, 2023, 1.82% per annum. The putting date for this is December 7, 2020, which was yesterday, and the closing date is on December 11, 2020, this Friday. Settlement date is next week, December 16, 2020, and the coupon payment dates are March 16, June 16, September 16, and December 16. Summary of the offer issuer is that it's from the Federal Government of Nigeria, and units of sales are 1,000 naira per unit, subjected to a minimum subscription of 5,000 naira and in multiples of 1,000 naira thereafter, subject to a maximum subscription of 50 million naira. Interest payment is payable quarterly. In terms of redemption, is a bullet repayment on the maturity date. Looking at the status, it qualifies as securities in which trustees can invest under the Trustees Investment Act, qualifies as government securities within the meaning of Company Income Tax Act and Personal Income Tax Act for tax exemption for pension funds amongst other investors. Is listed on the Nigeria Stock Exchange and qualifies as a liquid asset for liquidity ratio calculation for banks. In terms of security, is backed by full faith and credit of the Federal Government of Nigeria and charged upon the general assets of Nigeria. Interested investors should contact the stockbroking firms appointed as distribution agents by the Debt Management Office. Let's go to Fidelity Bank as the private sector continues to engage and assess the market, the debt markets. And Fidelity Bank is pleased to inform investors and the market that it is set to roll out up to 75 billion naira cedis, one 10-year fixed rate unsecured subordinated bond under the bank's 100 billion naira bond issuance program. The offer opened yesterday, December 7, 2020, and is scheduled to close on Monday, December 14, 2020. Fidelity Bank, which is a top tier 2 bank contributing to the economic and social development of Nigeria, has carved a niche in the financing of the all-important small and medium-scale enterprises, SMEs. With the attendant positive impact on entrepreneurship and employment amongst others, The bank has evolved over the years to become a valuable brand with a notable presence in the Nigerian banking industry, a good geographical spread across the country, and reporting strong financial performance superior to its peers in Tier 2 category. The bank's financial statement as of September 2020 showed that profit before tax stood at 21.3 billion naira. Total assets rose to 2,575.2 billion naira compared to 2,114.0 billion naira recorded in full year 2019. Total equity increased to 262.2 billion naira, 9 million, that's in 2020, from 234 billion recorded in full year 2019. Proceeds from the Series 1 bonds will be utilized in the supporting of the bank's small and medium enterprises and the retail bank business, as well as its information and technology infrastructure. Of course, Fidelity Bank is aligning with the need to address the disconnect between the financial market and the real sector. Traders Investment Management Sustainable Financing Group is looking at the year 2021, and a lot of things have happened this year, as we know. COVID-19 pandemic, economic disruptions and activities have been really adversely affected. But for it, sustainable is the way forward, and it says both policy choices need to be made for the recovery to become sustainable and inclusive. This could be a vital first step toward a new economic system, one that is equipped to address the challenges of the time: climate change, biodiversity, loss, and inequality. Across the globe, financial markets largely wavered the impact of the economic crisis, rescued as they were by central banks and fiscal measures. And with debt levels at record highs and an uncertain economic outlook, Traders Investment Management remains cautious in asset location, neutral on average on bonds, and negative about the US equities and slightly positive about the Japanese and European equity. It continues to see opportunities in the sustainable investment landscape, especially in Europe and Japan. The European Green Deal, the EU's roadmap for making its economy sustainable, will likely gain momentum according to Traders Investment. The related development of a green taxonomy will enable investors to steer their investment towards more sustainable technologies and businesses, and the creation of the European Union Green Bond Standard, which will deliver a uniform tool to assess green bonds across board. The financial industry should look at return in a different way. A different, more forward-looking approach is needed to see what the long-term returns of investments might be. Given the challenges that the globe is facing, from the degradation of the ecosystems, the loss of biodiversity, the rising inequality and polarization in societies, expecting the same returns as before would be equal to financing a collapse, Traders says with all boldness. Possible in the short term, but inevitably disastrous in the long run. These challenges, according to Traders, should be taken into account in every strategic asset allocation framework. And it puts its bet that to assess them from a positive angle and to invest in impact and transitions, it believes this approach will help to avoid risk and other effects of best chances of possible long-term returns. So in the thematic part of its outlook for 2021, Traders has shed light on the longer-term investment outlook. It expects the social, political, and economic environment to remain highly uncertain, and it forecasts generally lower financial returns in the coming years. The investment winds have turned. The tailwinds of the last 4 decades favoring higher returns have changed into headwinds, leading to lower expected long-term returns across the board. So that shows clearly that sustainable investments will be the way to go from Traders analysis. Which brings us to Nigeria and why we need to take very big steps. What are the prospects for deepening sustainable financing in Nigeria, as we already hear what's happening across the globe, as oil and gas companies are shifting to renewable, as nations or Committee of Nations like the European Union, the UK, US are beginning to explore green, sustainable deals. What is it for Nigeria in terms of sustainable financing? The first important aspect of this is that this will help us to finance our sustainable development goals from the private sector perspective. And this calls for a solid deal, a solid plan for renewable, for sustainable. If we are to achieve great impact in Nigeria, the private sector must cash in on sustainable development, and they must be willing to support. But we know that the private sector always prices effects of policy, effects of strategy and plans. And so it's very important that policymakers in Nigeria do everything possible to woo the private sector to support sustainable development through financing. And that is the very first major step. The private sector, their role in sustainable development financing will be key if we're going to deepen sustainable financing in Nigeria. The second aspect is that we need to create more products for sustainable finance, from the capital markets, financial market, down to subnationals, and at the federal level, we've seen green bonds, several bonds. But beyond that, we need to also explore the various other levels. We have the non-interest finance, we have the sukuks, but there must be some creative products that continue to encourage sustainable financing in the country. And this goes out to all the players in the financial, capital market, and economic space to be creative, to bring products that can be keyed into for financing sustainability in Nigeria. The next most important thing, which of course all the companies and stakeholders in the private and public sector must take seriously, is giving priority to ESG. ESG is about environment, social, and governance. Those three components will attract investments in the future. Companies that have high-level ESG will attract investment. So how strong is your approach to environment? How strong is your approach to society, to social issues? And how strong is your approach to governance? ESG will be very important. So in Nigeria, from the public to the private sector and all policymakers and stakeholders, it's important to enshrine ESGs in all the activities to be attractive to investments that has the Financial Center for Sustainability, while the Nigeria Stock Exchange has a partnership with Luxembourg Exchange, and they're exploring how to improve sustainable financing. And so our exchanges, market players will continue to work with the federal government, state governments, and all stakeholders on rolling out effective and target-oriented green bonds, climate bonds that finance projects that will boost Nigeria's sustainable future. As we likely said, and it is a reality now, the future is green, and all projects that are tied to green will be of top priority in terms of funding. The next is about building capacity. Like I earlier said, there's a Financial Center for Sustainability in domiciled in the FMDQ. We need to boost capacity in sustainable financing. We need experts in sustainable financing that can develop products, that can process deals, that can process strategies and plans, working with governments across board to provide financing in that regard. Nigeria's gap is huge. And for us to really achieve sustainable financing, we need capacity from all levels. And it was interesting that this year, the Chartered Institute of Bankers of Nigeria focused on sustainable financing as its theme for its annual Bankers Banking and Finance Conference. So we hope to see more of that next year, more activities in capacity building around sustainable financing and the opportunities there. Nigeria needs a policy on sustainable development, a robust policy. As you see, the European Green Deal, the UK strategy for the next 10, 15 years, Japan strategy for the next 10, 15 years, all geared towards sustainability, green energy, supporting clean environments. Nigeria also needs a very clear policy that articulates its strategy and direction in terms of sustainable development. This is separate from the SDGs. This is about sustainable development. We need that clear strategy, and the earlier it comes on board, the better for Nigeria's chances of attracting investments in the space. And finally, from the legislatures, we expect improved legislation for sustainable financing. So this is a time for our National Assembly members, Senate and House of Reps to look into laws that will promote sustainable financing, laws that will also strengthen policies on sustainable development and a clean environment in Nigeria. And that is how you attract more investments and achieve deepening in sustainable financing in Africa's largest economy, Nigeria. That will be all for today's edition of the Market Review. You can visit our website www.proshare.com to watch our videos, read news reports, analysis around the fixed income, money market, and debt market. Very interesting insights. We'll continue to receive your comments and views. Thank you for sending your comments. But on the issues around deepening sustainable financing, we'd like to hear from you. What do you think about this in Nigeria? How can it be achieved? Send your views and comments to news@proshare.com or tag us at WebTVNG, and we will be available to respond to you appropriately. Till we come your way again, thank you for watching. Have a nice day and stay safe.